GDP is like a physical for the economy, right? If it's healthy, it means the economy is healthy. But we have been worried about what the diagnosis is going to be tomorrow. What are your expectations?
It's been very worrying. I'm expecting very modest growth, so around 0.3 to 0.5% increase, which, you know, is on the right side of growth in the sense that we're not likely to be going into a recession. At the same time, I'm not as optimistic as to think we'll be closer to 1%. Of course, a surprise would be nice, but I don't see us achieving those kinds of results.
All right, so you're certainly on the side of consensus, because a lot of economic analysts are also predicting that we're not going to be officially in recession tomorrow. But if the growth is as marginal as you say, not even a whole percent, not even 0.5%, I mean, we're literally dodging recession by a hair's breadth. Is that something to really be happy about, or should we be worrying about the fact that we actually are still on the economic precipice?
We should be worried. I mean, I think we often get focused on the short term, you know, the quarter-on-quarter figures, and forget the bigger picture. And if you look at the overall themes of the economy, we are at a very low level of growth. If we're going to achieve the kinds of employment generation that we want to see, this level of growth is simply too low.
Having said that, though, I mean, the fact that we've had one of the longest and historic platinum strikes in the sector resolved around June or so, the fact that we've had a strike in the manufacturing sector, and still, in that context, we're able to have, even though it's a hair's breadth, the whiskers growth, that we've had growth. I mean, that's certainly something to be buoyed about.
Well, yes, exactly. So the worst is over, right, in terms of the latest figures coming out in terms of manufacturing, in terms of mining, show that those big plunges are behind us. But even going forward, we're still not reaching perhaps the levels that we had over a year ago. We can't even think of the levels that we had before the recession in 2008. We're still not there yet. And yet, this is the kind of economy that we'd like to see, especially given the kinds of stresses that households are under at the moment.
Well, you know, whatever happens with those figures tomorrow, we are certainly going to have to sit up and take notice. I think strike management and long work stoppages are factors we have to pull back. Do you think, though, Trudi, that, you know, Labour is getting that message?
It's mixed in terms of the reaction that we're seeing and the rhetoric that we're seeing from Labour. I think it has to be a two-way street. I think Labour wants to also see concessions that their concerns are being taken into account. And once you don't have that conversation coming together, you'll always find that Labour seems to be not on the same page, and business and government are also talking a different tune. So I think the message clearly in the figures, they can see that this economy is not doing well. This economy is bad for workers. I think that's very clear. But whether they feel that the other side has heard them in terms of concerns around inequality, concerns around wage disparities, you know, that's the open question where I think you need to have a holistic conversation. It can't be that one segment of society has to make the concessions. Everyone has to make the concessions.
You deserve to know more.
eNCA.com